All right. Good morning, traders. Good morning. Good morning. You should see my screen, hear my voice. You should be able to talk to me, talk to each other. We do. Awesome. Good morning, Doug. Good morning, John. Why can I not make this bigger? There we go. Good Sunday morning to you, Kent. Hello, Stephen D. Good morning, Greg. Good morning, Sandy. Okay, here we go. Okay. Maybe I should put my slides up and then we'll get cracking. Thought I had slides. Morning, Victor. Good morning, Jamie. That feels like a fairly new name. Welcome. Are you pretty new? I hope I didn't miss you joining earlier and not say hello. Brand new. Yes. I like when I catch it early. Well, welcome. Glad to have you. Please feel free to ask questions, make comments. It's a very welcoming group, you'll find. Um, and listening to recordings that need to be fixed. I do need to fix a recording. Stephen D, you're 100% right. Welcome, everyone, to the Options Income Launchpad Sunday Market Insights. I'm Scott, and I will be your host. As always, let me remind you that what we do is for education and illustrative purposes only. Nothing we do is intended as a recommendation to buy or sell any security or financial product. We're not brokers or advisors, so we don't give personalized investment advice. Any decisions you make based on information you see here should be done so at your own risk. Yada, yada, yada. Okay. Let's posture. Hi, Vladimir. Good to see you. Hi, Gabe. Let's look at what's coming ahead this week, though, again, whatever else is on the calendar, the talks with Iran apparently are failing. So I am a little apprehensive about the news. Now, again, look, the market just made a huge rally. So if we have a pullback and it's not too big, that'll actually play into a recovery narrative. That's the great thing about a V style recovery. Big surprise, right? Uh, yes, unfortunately. uh, I'm with you. Um, we'll talk about our trading plan. Um, well, Stephen D says he's not worried unless ships are fired upon. Again, you know, every day that strait doesn't open puts us closer towards a $150, $170 a barrel energy, which doesn't take long to end up in a, you know, potentially global recessionary environment. So, yeah, okay. Lots of political posturing might mean nothing or everything. Agreed. And Trump's imposing a total blockage in or out, which I'm kind of like, what if it's closed? Who are you blocking? Um, yeah, I don't know. The Chinese, are they moving in and out like pretty uh easily? Reverse blockade, so they must buy oil from the US. I don't know. This seems and feels like it's maybe spiraling. Um so we'll see. We will see. Let's get to it. Let's go. I've got my market up here. I will get my market posture. I had it up. Let me find that real fast. Market posture. Okay. Here is our log. Let's insert a column before. Let's put this in. 04 12. All right. Let's also the blockade is there to keep clear minds and keep ships paying tolls. Wait, it's to make it so they don't have to pay tolls, or we're trying to now be the toll collectors. I'm not sure I'm not sure I'm no tolls. Okay. I guess that's better. No tolls. Um hmm, to stop the Iranians from charging tolls. Okay. Well, I think what prospects there were on Friday seem to be diminishing quickly as far as a diplomatic solution. Um, can't have Iran controlling the world. I mean, is it like to certainly they are impacting. It's an impact. I don't see much. I don't see much outside of that. I don't know. Um, I guess if we see a bigger picture here of now turning it into a, policing the strait, I think we're in for a long haul. All right, let's go. Stop thinking about what we think and feel. Let's talk about what we see. Um, aren't we and the world squealing about? Oh, well, yeah, definitely, absolutely, because it's super hyper inflationary. I don't know. Um, so is that suggesting that we're now the only way we would control that is if we take over Iran's oil? Um, I, that's that's not the. I don't think that's the direction. Um, so all right, we'll see. We will see. Let's keep it market based. Um, I need the I like SD's optimism too. He's let's grab a oh no, I already have it up. Sorry, hold on. I know where it is. I was like, where's my Oracle? Ta-da! Here it is. Here's the Oracle. We are going to where am I? Let's go to long-term trend. 04 12 26 chart. Let's get started. Let's get started. Don't need their well. See, here's the thing. This is I think what gets missed is oil doesn't exist in a vacuum, right? When we say we don't need their oil, um, it's a global price, right? Like, I mean, we trade oil. So when oil that's produced in another area will, has issues, it's going to cause a ripple. We're not going to be able to have like a this is the U.S. market, um, and we exist outside of the global oil spectrum now. So we're going to just be like, we're going to sell, we have all the oil we need and we're going to sell it to ourselves for $70 a barrel in order to keep, right? Like that's not a thing, right? The all the oil companies exist globally. And it's like when we say we have all the oil we need, it's not about like, do we have it? It's about the fact that we're all tied into a global oil market. And it doesn't matter if we have what we need, the price of our oil is still going to be $150 a barrel. And gas prices are still going to be $7, right? Like that's kind of the point is it's there we can't exist in an oil vacuum. Um so um it's we can supply more to the world and make the profit here, except that it's oil companies, not a country like it is some who's making the money. Americans, right? No, uh, Mobile and other or to me the oil companies. So, anyways, um, okay, the markets. What did we get this week? Last week we had stability. This week, we have growth. It expanded. I'm giving mine a quarter point. We got back above the purple line. The next line I'd like it to get back into is this old red line. That's where we were before that. But for now, this is good enough. Oops, sorry, to get a quarter of a point increase. The question is going to be how much overall increase do we see? Okay, so let's put this in here. And I am going back to a 0.75. Anybody else? Steve C, 7.5. Good. Okay. There you go. Let's see if the Oracle did the same. Upgrade. SPY bounced strongly this week, reclaiming the 50-week EMA, pushing back toward the underside of the prior rising channel. That's the channel we want for another quarter of a point. While the longer term uptrend has been damaged, the response shows buyers stepping in at a key support zone, preventing immediate continuation lower. The trend is no longer cleanly bullish, but the recovery off support justifies moving out of correction, transitional stabilizing. Yeah, okay, that makes sense. That makes sense. I am in agreement there. Okay. Let's go here and do the same thing. And I'm also going to give it a quarter of a point here. I don't know if I'll go a half. Yeah, I think I'm going to take it to a minus 0.5. Maybe better. Maybe let's see. Oops. Ooh, that's a fun beach picture. We were here. We held, we broke, moved a little higher. I mean, we did vault through a couple, but you can see that was a pretty good jump. You're at a positive 0.75. Okay. Or your long term is. I might have missed that, Stephen. Very good jump. Yeah, I'm leaning like a little bit towards a possible half a point. I mean, it was a big jump. If Oracle gives it a half a point, I'm giving it a half a point. Let's go see. I'm so curious. I did. Half a point. The short term is improving, but not yet bullish. Mounted a strong rebound while also pushing back towards the 50. Early recovery, not a confirmed trend shift. Minus 0.25. I'm okay with that, actually. That's a big jump. I'm gonna agree. Minus 0.25 for both of us. That was it's representative of quite a bullish recovery move. Big jump up. Hey, Bob Rowland's here. Good to see you, Bob Rowland. First trip back to New Jersey. Okay. Hope the move went well, sir. All right, now, next thing we're going to look at, let's zoom in a little bit more and go to the volume. And I need a little more space. I don't know why I always go back and forth from 7 to 10. It's very strange. No new volume spikes. No new volume above average volume days. I've got two of these back here that are kind of stale at this point. So yeah. Okay, I think I am gonna get rid of both of these. Interestingly, sorry, let me move this out of the way for me. Interestingly, it really was only this drop total, right? Like it wasn't much more than this one day. It was just that little extra. So I'm okay with that. I'm gonna cut that. That's stale. You're not counted. We have this pocket here, which is 1, 1, and 1. And then we have a buy. So we have one sell day, two buy days. That's a 0.25. Wednesday, I talked about keeping them. Yep, until real time day came. And I said, nope, they're gonzo. Wednesday, I thought maybe, but no. And this is now it's not much of a positive slope, but it is a slight positive slope. So there it is. I'm gonna say 0.25. Let me get the AI prognosticators read. Okay. And then let's go volume. 0412 26 chart. Whoops. Okay. Okay. It's a zero. It upgraded, but only to a zero. Okay, that's fair. That is fair. I am taking mine on a that's 2 half-point ones for me, which is quite uncommon. That's a big jump. And this volume's going to zero. We're both at -1. Whoops. Hmm. I don't understand sometimes when okay, there we go. Like what happened? Okay. Any questions? Where we stand now? I am a positive 0.75. The model is a 0.25. All right. Buyers pushed. Well, you know, the hard thing is you're at a positive 1.75 overall. Woo, Steven. All right. I would say be careful that you're not scoring what you want, but what you actually, right? Like, you know, positive 1 point. Okay. Fair enough. Fair enough. Um, is my AI long term? I thought it went to 0.75. Oh, you're right. It did. Sorry. Good catch. Good catch, Don. Okay. Let's go. I need this out of the way. Let's go here. And let's do major market analysis. Let's get this first one. Sorry. Okay, there's one. Oh, 04, 12, 26 charts for standard major market analysis. Giving that a little extra context because I accidentally stuck a wrong combo in there. I hate when I do that. What have we got? Two things. Number one, Russell still leading. Number two, NASDAQ shooting. Ooh. I mean, it's still down, but we notice it because all of them were down pretty lockstep. And then all of a sudden, over the last week and a half, who shot a little higher? Technology. We love technology to come and lead the way. That's the market that we're more interested in, without any doubts. Maya calls it NASDAQ still lagging in its recovery. Yeah, I mean, we only saw the very beginnings of it, and you can see here, Gabe, I have to agree. Look at it. It's already fallen back towards the lower end. So it's any sign we see of recovery is good, but the fact is it has to sustain across multiple time frames. That's the whole point of this analysis in its construct, that we're taking 0 points. And you can see again, now this is good because it was the very bottom, and now it's actually past the Dow, just barely. You can see barely right here. See this? Oh, just a little bit above it. But it's still, I have to agree. It's trying, but it hasn't accomplished it yet. It seems to have made some progress. I'll give it credit for that. And we do still have the Russell leading and going back positive. So as much as I've been skeptical about the ability for small caps to maintain, to help the market maintain its position, it's trying. Okay, so there's where were we? Did I go to a 0 last time? I went to a negative last time. This actually, no, did I go negative? I did. I think I'm going to go back to a neutral on this one. I feel like it held through the storm. The small caps back where they need to be. Did I post this one? I did. I think I'm going to go to a 0 here. Steven's a 0. Don's still negative. Okay. Anyone gone positive on this one yet? And then look at the small caps prevailing. Well done, small caps. Okay. Boom. So I will send this while I update mine to a, I don't know, I hate this spreadsheet. I need to migrate my license from my old computer. So I'm stuck on LibreOffice until I motivate myself to do that. 0.25. Okay, Gabe. 0.25. Because Russell leading. I know I do. It's just like I wanted it to just work the way it's supposed to work. I don't want to have to go in and do things, Steven. Spreadsheet master. Okay. Let's go see what the Oracle has to say. Did you see the charts and request for analysis for 041226 above? Did you see it and just not do it? Come on, Oracle, do your work. Okay. Major zero. What am I? I'm a zero. Okay. We're in agreement. We are in agreement. This is a very quite a remarkable recovery. So let's take out what we think and feel about the conflict and politically, and just what do you see here? Because what we see is a representation of the net sum, mostly driven by 90+% institutional market involvement. And I work off the assumption that the uh, institutions have a lot more people on the inside of different things politically and whatever else than we do. They know more than we do. They're ready better than we are. I want to watch them and see what they're doing. If they're feeling more confident, like we're seeing here, then I'm like, okay, fair enough. There must be something happening. Could it abruptly reverse because we know this is a very reactionary market? Absolutely, that's true. Okay. Sector rotation. Sector rotation has been one of the weakest of what we've been analyzing. One of the weakest. I was thinking about the market, and it's very much about human behavior. Very, very much about the herd more than a lot of other things. Um, it's one of the things that I've said a lot over the years that I think led to frustration with individual traders I would work with is I would say the market doesn't have to make sense because something would happen. They'd be like, well, this doesn't make sense. Oh, I'm sorry. Were you of the opinion that this jungle of ours was supposed to be making sense at all given time? Like, oh, this is, as long as it makes sense to me, everything's fine. Like, okay. Um, okay, let's see here. I am moving on to sector rotation. Oh, 41226 charts. And okay. I think I took a picture of it, didn't I? Let's see. I thought I did. Yes. Okay, that's in. Obviously energy, but it's come down. This is nice to see this come back down. Unfortunately, the closure, regardless of how much oil we produce or have available, the closure will have obvious impacts on. So if we're also helping to stop things going in and out, well, then the price of oil will turn around again and go back up. It's just what it is. Then next step down, I've got materials. I do have industrials fighting the good fight for the growths. Right? I do have industrials. There's some growth there, but it's stuck in like utilities, materials. We do have a little sign of technology coming up here. This analysis increasingly gets defensive as we move from 200 to 133 to 66. What we're looking for is that to not happen this time, to potentially move it back to a whoops, that's the wrong way. Let me go 133. Don't break the progression. And we'll get a picture of this. and put it in. Whoops. More of the same. Materials strong. Industrials is in there. And then utilities, and then healthcare, staples. This is very defensive. It's defensive slash inflationary. Materials are getting more expensive. Utilities cost more. Healthcare costs more. Food costs more, right? Like that's what's, and then industrials is doing okay. It's holding up. But where's our growth sectors? Financials, technology, staple or discretionary, bottom. Financials, bottom. Communication services, bottom. Technology, bottom. That's been the problem right there. We haven't seen much of an improvement as of now. Let's see what happens if we get to 66. Yeah, still no. This one is probably staying right where it is, minus 0.75 for me. Oops. We're just not seeing any institutional money flow into a manner that makes us think, yeah, they're aligning for this thing to move. Wherever else we might be seeing signs of improvement, it's not here. Let's go down to the, yeah, I mean, it's just everything's down in this area. Let's go to 22 and see if there's at least any prospects coming our way. Not really. You can see materials is there. Oh, all right. Come on now. Well, that's messing up. I'm going to leave my score the same. That's going to go here. Financials. So a little bit of financials there. A little bit of technology. So maybe if this continues, we can see that getting a little bit better. But as of right now, I don't think we have much prospect for that. So let's take a picture of the 22 and complete the analysis. Okay. Oh, okay. This is the first week where the question is actually legitimate. Is it still, or are they transitioning back? Meaningful improvement. This is the 66th day. All right. I'm not seeing it. Technology stopped making new lows, stabilize, lifting off the bottom. No longer clearly lagging. And industrials is a strong leader. I don't. I don't know. Okay, I'm going to accept it. I feel like that's a very optimistic purview of what that 66 day saw. Where's everybody else on this one? I don't see a lot of good things happening in sector alignment. Let's see. Minus 0.75, minus 0.25, minus 0.75. Don got a jump there. Okay. Think there will be more defaults and foreclosures. Okay, so on the real estate, I mean, you look, I'll tell you this. Let's pause for a second and let's talk about the economic calendar. So last week, a few things came in. We did get higher inflation. No, where was our jobs? It was the week before. Anyways, we did get 180,000. You know, I know that there's some concerns in tech, but as of right now, As long as employment stays okay, I don't know. I think we'll see. What do we have this week? We have PPI. It is March. I think there's some concern. We were at 3.5. It's going to spook people if any of our inflationary data gets closer to 4 than to 2. Right? Like if we move towards like the high 3s or even touch 4, that will spook the market possibly. Wednesday, we do have the beige book by the Fed, but no one's looking for much help from the Fed. I don't think we have any expectation for this year as of now for a cut. Jobless claims still in the low 2s. That looks just fine. So really it's Tuesday's PPI that we're going to be looking at. So yeah. Okay. Where was I? Did I finish? Okay. So I'm a minus 0.75. It's a minus 0.5. Wow. This is quite a jump. This is quite a jump this week. I think we're going to still get another quarter, but the mall, we could end up getting almost all of it back. Surprising. Quite surprising. We'll see how well that stands up in face of the news. Now, here's the deal. Some people get worked up over gaps. So we do have this gap here. I don't want you guys to get worked up over the gap. If we pull back and then get into this gap, this 660 line is much, much more important. If we pull back and hit that, even that right there is a strong one. So we have some cushion. The buyers gave us a little cushion, is what we're saying. For, if the selling doesn't come hard, and it could come hard like this, and then if it stabilizes, we're still going to be thinking to ourselves, oh, okay, that's very different. You might ask yourself, is there bearish opportunity? Yes, still potentially from here to here. If you're seeing stocks as we go through our list, when you see the stocks that all made these big bullish type moves, those aren't the ones that you want. It's the ones that didn't go as far and start to roll over a little bit sooner. So we'll talk about that, but we definitely V'd. This is very much qualified as a V pattern. Even though it didn't have a great amount of volume in the second half, it did have good volume in the first half to kick things off. So there you go. Okay. Let's go score the VIX, call it a day there, and then we'll go through our watch list. So for me, what happened this week? The first thing that happened was we bounced. We turned. You can see it confirmed down there. That pinched. This day took out the prior day, and that made a higher low. That's a minus 0.25. It made a higher low. That still was showing signs of escalation literally until Tuesday. And then what? And then Wednesday happened. And on Wednesday, we broke through this low and we got that 0.25 point back. For me, I'm just walking you through my scoring. Then we also, at that same time, broke through here. Old high, new low, right? So when we broke through there, we got another quarter of a point. What does that all turn out to be? My net score improved 0.25, which means I am going from a minus 0.75 to a minus 0.5. Minus a 0.5. That's a hell of a jump. That's a 1.75 point jump. Let's go see what the model says. The Oracle. Dun, 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 dun. Okay. Last one. 04 12 26. Go. Ready, go. Prior score minus 0.25, new score 0. So the model was also at a minus 0.25, like some of you, and also went to a 0, which means that it has regained the full amount and is now at a 0. I am at a minus 0.5. That's a great week of recovery. For me, let's go see. Watch the model jump. Nope, only a quarter. It's a 0. It transitions further away from the fear regime back towards neutral conditions. What would improve it forward? Sustained move below 18, compression towards 16, 17, flattening, rolling over of the 50. If it moves back up. Okay. Yeah, good. This is a fairly strong score. Unfortunately, the news that we're hearing now is not supporting us maintaining. But the market has shrugged a lot of things related to this conflict off. It shrugged it off. It's like, oh, it's going to be okay. We're going to do. I don't know. Let's just give it a chance to see. And let's see what happens. Yeah, I mean, I think we're going to see a pullback. The question is how much. The other question that everyone individually asks themselves is, what would I do with this pullback? Am I going to watch it, wait to evaluate it, and then try to trade what's next? Am I going to try to trade it down? Now, remember that our posture just moved out of, slightly, it was right at the verge of the bearish end of neutral, verging into slightly bearish, right? Around that -2.5. If it gets to -3, then you're like, okay, now I'm more in that slightly bearish. Yeah. Okay. All right. The ceasefire absolutely did. Now the question is, how can it sustain that, or do we end up heading back to those old lows again? That's where we're going to be watching and seeing here. Let's get to the watch list. Especially now that we have this, we're going to be really looking for that bull list. Um, Alcoa. Oh, wait, we forgot about this. Don't forget that earnings start next week. Um, this is Alcoa. I'm bullish on Alcoa, but it does have earnings, so we want to be aware of that. I agree, Bob Roland. I agree. It'll be interesting to watch at around 5:30 p.m. Eastern. The futures come on. You can go on and take a look and see. I had to bring that up. Earnings is next. We've got to be aware. Apple hasn't really done enough for me yet. Archer Daniels is one that I like. Applied Materials was beautiful. Reached my target. Looking for the next one to come on a pullback there. AMKR looks pretty good. I like Amazon on a pullback. Let's find some momentum that's helpful to the market. APH, ASX still in. Reached one target. Who's still in this one? This was an alert. It reached its first target at 25. We're gonna see if this thing can keep on going. Reach the next place and knock out a nice little trade. There was no leverage. I did the stock. The options weren't great, though. I think some people still went and bought an option. I'm curious how they're going. If you did an option, if anyone did the option instead of the stock, let me know how that's playing out. Okay, you did the stock as well. That makes sense. Baba, no. Bank of America, yes, except for the fact that it has earnings. So you have to be careful. I am going to put these on, but be aware of what this does. Citigroup is on my list. Caterpillar doesn't have great earnings, so I'm going to say, be careful. Be careful. Not great earnings. Sorry, doesn't have great options. Doesn't have great liquidity on its options. The spreads are certainly not ideal, right? CF, not bad. Coherent looks very strong. I'm putting that back on my list. Cisco on my list. Starting to expand. Delta's interesting, actually. I think there could be a little something there in the airlines. Dow, obviously, on my list. Ford, no. GE, no. Gold, no. GM, no. Google, ooh, I think Google did enough. All I care is that it made this run, got back above the 50. If this pulls back and it holds above 300, then we will have a conversation. Okay, let's see. All right, let's keep moving. Um, Always misses, right? Gabe, I 100% agree. We will have an unlimited supply of opportunities. HL, no. IBM, no. Intel. Intel popped. I'm going to put it on my list because if it makes a reasonable pullback, there could be a tradable situation there. Small caps, trying. Lumentum, strong as always. Just keeps going. I like LRCX. You can see this one made a move recently in line. MasterCard, no. Meta, maybe. I need to see it get above those moving averages. Monster, no. Morgan Stanley, yes. Microsoft, not yet. Micron, ooh, I don't think so. One more week, maybe. Well, it did get back above. I actually would trade Micron. If it pulled back and held, I would trade Micron. Netflix has earnings. Let's hold. Nvidia is trying. Needs a little more for me. Palantir, no. Google, or excuse me, QQQ, okay. Rocket Lab, sideways. Ross Stores. I still like Ross Stores. No. SNDK, all of these all of these digital storage look pretty good. STX, you can see, does. SYY. I was actually looking at this one bearishly. These guys did an acquisition that the market did not like, and you can see it really struggled. Gapped, sold off, rallied, and then just turned again. I don't know. TJX, no. Tesla still looks bearish too. TSM made a good pop, but earnings coming up. UPS doesn't look great. It definitely reversed off of this. VALE, Viking Cruises, VOD looks pretty good. I'd put that on my list. WDC looks good. Put it on my list. Walmart, meh. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. Well, what a difference a week can make. Now we have 21 stocks back on our bullish opportunity list for this week. But what does it hinge on? It hinges on the market's initial reaction that we're going to see tonight. Can I update the trading list? Okay, so I'll update the broad list. And then remember that I do send out, if you go into the Sunday post, that will come here. I had Fridays posted. I don't know what happened to it. I'll have to go back and see. But when I post the Sunday one, like here's last week's, it's kind of long because I put in like, here's the group's posture and why, here's the AI posture, here's what it means, what sectors are we watching, what trading plan section, what's on the calendar, and then right there at the very, very bottom, that's the bullish watch list. So this list that I just created will be there, but I will also go in and update the downloadable one as well. Cautiously optimistic it is. I like the tone. All right. Well, thanks everybody. It's good to see everybody. Enjoy the rest of your Sunday. This will come out to you via email or it'll be posted, and then we'll pick up tomorrow as we transition from our market posture to our trading posture, meaning now what? What are we going to actually do? Will be tomorrow morning. So I'll see you guys then. Have a great rest of your weekend. As always, happy trading.